It's Thursday the 5th of June 2014. This is a brief new crop market update. Grain markets are very much stuck in a bearish trend at the moment. New crop feed wheat futures for November 14 are approaching very close to the £140 per tonne mark and currently setting new lows for the life of the contract, and certainly the lowest prices we've seen since the respective crop was planted. The reason for the bearishness in the market at the moment is growing confidence towards the state of the global grain crop. No real major issues on the horizon at the moment, but that crop obviously has yet to be made. In addition to that, as time goes on, the UK is facing the possibility of having to return with some competitiveness to the world export market for wheat after an absence of around 2 years. From a global production perspective, the early forecasts are out in terms of global production. It looks like things are going to be on par in terms of total grain production with 2013-14. Wheat looks to be a little bit lower at the moment, largely driven by lower production in the US, some droughts in some of the key winter wheat producing states, although that's been alleviated by moisture recently. In Europe though, crop prospects look very, very good, and it looks like Europe will have to be a very competitive exporter for wheat, which is some of the explanation behind the recent price falls. Elsewhere, there remains a bit of uncertainty as always this side of harvest, particularly in the likes of Russia, where weather is a key part of it, particularly because of the amount of the wheat crop which is spring sown, and so is that a little bit more vulnerable to the weather, and with that slightly less information coming out from that region, the outcomes of that really aren't known until the combines move and the harvest becomes available. On maize, production is very similar, was forecast to be very similar with what was seen in 2013. A big driver here is what's happening in the US. US farmers are expected to have planted less maize and more soybeans. The reduced area of maize very much compensated for by higher yields. The key month for the US maize crop is of course July, so even though the crop's been planted well and in a timely fashion, and as we saw in 2012, it's about the crop getting through the summer, its key yield forming month of July, without being exposed to heat and dry weather stress. And so the market will be waiting really for July to come and go before it gets too confident about the availability of global feed grains. On the oilseed side, it's a very similar picture to the grains in terms of prices at the moment, a very bearish trend at the moment. The prospects of a bigger area of US soybeans which have been planted in a relatively good way, at a good progress, and so there's limited crop concern so far there at the moment. That's offset a little bit at the moment because of tight nearby stocks of US soybeans, but being alleviated because of the good record South American harvests and the reduced logistical issues we're seeing out of Brazil, much fewer issues than what we were seeing 12 months ago. From a European rapeseed perspective, crops look very good, and that's again applying more downward pressure to prices and potentially narrowing the import requirements that Europe has for rapeseed and broader oilseeds. Final thoughts as we head in towards harvest now, and the market really is becoming very, very production focused at the moment, focused on what are essentially theoretical production estimates at the moment, and really the key point is that the next 8 weeks are going to be critical for the Northern Hemisphere crops. A huge proportion of the world's wheat and feedgrain crops are starting to build their yield now, and so the next 8 weeks really through to late July, early August are really key, and that's what will set the precedent for the market. Once the market has a handle on sort of production, the focus will move to how demand will develop, how trade will develop. Remember last year there was a huge demand from China for US wheat. Will that be replicated? This coming season will very much depend on the quality of the Chinese wheat crop, so we can't necessarily, from a wheat perspective and from a broader grain perspective, rely on China being there consistently for buying global grain for import. It's all too easily when we're in a very strong bearish trend like this to get complacent to it and sort of write everything off. It's very important to be aware that there are a number of what can be called known unknowns. The threat of El Nino is in the background. If there is an El Nino event, and it's a big if at the moment in 2014, that could have consequences for the size of the Australian wheat crop. We only have to go back to the likes of 2006 and 2007, where the Australian wheat crop was severely hit by drought. We can't really put too much weight behind that moment because it's an if, but it's one that's worth watching. Another sort of known unknown is what's happening with Ukraine. The political issues so far don't seem to have had an impact on the supply of grain or indeed the new crop prospects for the region. So the market has become quite relaxed about the political impact on the supply of grain. That's not to say it can't flare up in the future. Exportable wheat stocks becoming a bit of an issue to my mind at the moment. In recent years, the world's been very used to the US having a very large amount of stock to basically bail the world out should there be a deficit somewhere in the world. What we've seen in recent years, which was amplified last year when we saw big demand from China and Brazil, is continued erosion of US wheat stocks. And that just takes a bit of the comfort zone away from the global wheat market, puts a little bit of tightness around exportable stocks, and just means that the wheat market may have to be a bit more proactive relative to the broader feed grain market and to ensure that the world has sufficient supplies. Currently the market's not getting near to a 2007-8 scenario when the world nearly ran out of exportable wheat, but it's getting sort of to a tightening phase. So just something the market's trying to proactively watch out for. Another one to be wary of is logistics. This year we've seen big logistical issues from Canada, and really as the world's starting to demand more grain, it's starting to put pressure on the world's ability to move grain to ports and to move grain from those ports onto boats and get them to the demand. So that becoming a bit of a bottleneck, and the Canadian impact may well have spillover impacts into the new crop season. And the other one, of course, is currency, particularly from a UK point of view. We're seeing this long-term strengthening of sterling now, particularly against the euro. And as we're trying to re-emerge as a key exporter into the European wheat market after 2 years of absence, that's quite a negative factor to the price. It's not only is it the supply and demand that's forcing the UK to think about re-emerging as an exporter, the currency is also going against that as well. And UK wheat has a big job to do this year in recapturing demand that was lost over the last 2 years to both imported maize and imported milling wheat, but also trying to recapture some export demand into key markets such as Spain. If you want to find out more, HGCA's market experts will be on hand at the cereals event next week, so please feel free to come and have a chat with us. Thank you.